here called club accounts, which are similar to the trading profit and loss accounts that we did before. So if we just go through the layout of it, what we have, when we did our trading profit and loss, we had two main documents. So we had a trading profit and loss, which we think of as this document here, which has would have started off with sales, opening stock, cost of sales, etc., and then expenses, less expenses. Okay. Then we had a thing called a balance sheet. We had fixed assets, current liabilities, and financed by. We're now doing this for a club, for a non-profit organisation, something like a charity or maybe a local soccer club or the GAA. So the document is similar enough to what we've dealt with before, and obviously you've looked at this in class. So I'm going to go through now how we would do the question on page 204 and 205 and how we lay it out. So in terms of the incomes of this club, so first of all, we've got the name of the organisation, so it's the Ring Development Group. Okay, so I'm going to put that up here at the top. So this was a mistake a lot of people made in the Christmas exam, the November exam. They didn't actually label the top part of the question. Okay, so income statement of RDG for the year ended. So it says 31st of December 2019. We're looking at the top of the question, that's where we get this information. And then a statement of position, of financial position. So we would have in the past called this a balance sheet. The statement of financial position is quite acceptable as well. It means the same thing. So RDG at 31st of December 2019. Okay. So now, if I just go through the parts of the question. So I have the book here. So we have 1, 2, 3 main parts of the question that we're looking to get information from. We need to put this information into our answer somewhere. And we're going to start with the words. We're going to do the maths, remember, at the end. We need to think about where do we put all of these things. So the reserve fund, this is like the money that's been saved in the club by the members over a number of years. So if this was a business, we would have called it capital, but for a club, it's called accumulated fund or reserve fund. So that's put into financed by. So I have it written down here as accumulated fund, but we're going to follow what it says in the question. So it's reserve fund. Okay, and we have 331, 300. Next, we have buildings. So I presume at this stage you have the question open in front of you and you're going through this. So buildings is a fixed asset, so I put it up here. Now we're going to have depreciation that we need to calculate. So depreciation when something goes down in value, so it's really worth a different amount. So in the cost figure, this is where I'm going to put the number that comes from the question before I look at my depreciation. So buildings is 200,000. Then we have equipment, 80,000. That's also a fixed asset. Okay, then we have motor vehicles, 210. Opening stock of clothes and furniture. So what that means is this, I would expect all of the incomes to be added up here, but this here has, we need to do a trading account because it's got a shop. Some clubs might have a bar. In this case, we've got a shop, so we're going to change this to shop trading account. So that means we're going to have shop sales. We'll look for opening shop stock. We're going to look for shop purchases. We're going to look for closing shop stock. Okay, so that we can work out the profit on our shop. And that is going to be one of the incomes of this club or this charitable organization. Okay, so opening stock of clothes and furniture. So obviously we have a charity shop, and at the beginning we have 2,600. Now, 40-year loan at 8% interest a year. Well, that's money that we owe, so I'm going to put that in here down the end in our financed by. It's a loan that we have. So it's another way of funding our club. So I have 40-year loan. Okay, and that's 100 grand. Now, the money that's left over, just so we understand, here in our income and expenditure, or what we call the income statement, if this was a business, we would have called this money at the end net profit. But this is a charity, they don't aim to make a profit, so we will call this either a surplus or a deficit. And if we make any surplus or deficit, that's saved in the club. We don't pay out dividends or anything, so we're going to add that to our opening retained fund. So whatever that figure is that I have over here when I've done my maths at the end. Now, in terms of expenditures, it mentions we've got a loan with interest, so I'm going to have to put interest on the loan. That's going to be in here. So the loan is, just quickly go and do the maths on this now, so it's 100 grand, and it says in the question that the interest is 8%, so I'm going to multiply it by 0.08, so we have 8% interest on loan. So moving on to the summary of financial transactions. So we have up here, we have shop profit is one of them, but we haven't calculated that yet, but that number will eventually go in there. Recipients contributes for lunches and laundry, so I'm just going to say lunches and laundry. And that is 52,000. That's a revenue, it's the way we get money. So we have grants of 110. We have now shop sales, so that goes down on my shop trading account down here. So shop sales is 21 grand. And then we have other fundraising. And the other fundraising is 12 grand. Okay, moving on to expenditures. So interest on loan, it's mentioned in the question there already. I've already calculated that, so we have expenditures. Where is it now? Sorry, insurance. Sorry, what am I saying? So insurance is 5,600. Light and heat is 4,000. Diesel is also 4,000. Minibus repairs is 1,800. And loan interest, I have caretaker's wages, so I'm just going to need an extra line, so I'm just going to squeeze an extra line in here. Okay, so we have loan interest, I've done caretaker. 12,000. And then we have meals is 85. And physio is 11,000. Okay, then we're moving on to the top of page 205. There's other information there. So we've got a bank overdraft of 1,200. That's money we owe. So that's going to be current liability. And it's 1,200. Then we have closing stock of 1,800. That's closing stock for the shop. So that's going to go in here, 1,800. And it's also going to be a current asset. It's got debtors of 8,000. Debtors is 8,000. And then we have creditors. So people we owe money to, similar to businesses that we've dealt with before, 4,500. Okay, now the one extra thing we have in here is depreciation. So I'm going to have to squeeze depreciation in here as another expense. So I'm going to shift these lines down. No. So I'm just inserting 2 extra lines so I can put in my depreciation. So depreciation is the loss of value. So buildings, or in this case it's motor vehicles and equipment, they've gone down in value. So what I'll do is I'll put the loss of value in here in the income account or an income statement, and I'll subtract that loss of value here to get the real value of these assets when I do my maths. So we've got depreciation. The first one is depreciation of motor vehicles. And then we've got depreciation of equipment. So it says depreciation of motor vehicles 12%. So I go over and I find what is the amount of the motor vehicles. So motor vehicles is that, and I multiply it by 12 and divide the answer by 100. I do the same for my equipment. So the equipment is 80 grand and the depreciation is 15%. So I'm going to multiply that by 0.15 or multiply it by 15, divide the answer by 100. So there's my depreciations. And those amounts, depreciations, I'm going to put them here in my depreciation heading. So depreciation column. So my depreciation equipment is going to be in here. That's 12 grand. And depreciation of motor vehicles is the figure I worked out already, 25,200. So that goes in somewhere twice into the answer. So we now have all the numbers in the answer, and notice there's one thing we spotted there in our shop training account, that we have 0 in shop purchases, not mentioned. So this is a charity shop, so we buy nothing, it's all donated to us. So in this question, we assume shop purchases is 0. So let's just start by doing our maths now. So normally, to work out goods available, I would add my opening stock and my purchases and maybe carriage in, but there's none in this case, so it's 26. Take away my closing stock, so that's 26 minus my closing stock, so that's 800. So the profit that this charity has made in our shop is 22,200. So that number there is on square D31. So I'm going to put whatever is in D31, that formula up here in shop profit. So that figure is the figure I got for the shop profit. So now let's work out the rest of our maths. So the total incomes is going to be adding up everything from the 20,200 up to down to the 12,000. So the expenditures, same story. I'm going to add up all of my expenditures. Everything from the 8,000 interest on our loan all the way down to our physio fees. Okay, so we have our depreciations included in that. So my surplus or deficit, we have total income of this of 194 minus 168. So we have a surplus of 25,600, and we're going to put that surplus over here in my finance by. Okay, now move over to our balance sheet. So the other document down the bottom here, shop training account, I've already finished that one. So moving on to my balance sheet. So how this works is, there's no depreciation mentioned on buildings, so therefore the net book value, what it's really worth, is 200,000 minus 0, 200,000. The equipment is worth 80 minus the 12,000 depreciation, so the real value of my equipment is 68. And the motor vehicles, they were worth 210, but they've lost 25,000 of value, so they're worth 184. So I'm going to add all of these numbers together. So that's adding all of my fixed assets, 452,800. And we move down to our current assets. So current assets, we add our closing stock and our debtors. Current liabilities, do something similar. We add our bank overdraft and our creditors. And our working capital, we know from having done these before, businesses, we subtract the current liabilities away from the current assets. So current assets minus the current liabilities is 4,100. So the net assets is going to be all of the fixed assets plus the working capital. I then move down to finance by, and I add up my reserve fund plus my surplus and plus my plus my 40-year loan. And if we've got the question done right, we should end up with the same number in both. So that's how we do the question on page 204, and you'll use that to do the next two questions.